Energy cost, we believe, is a big influencing factor to the cost of production, particularly in a heavy manufacturing environment, probably most influential over metals and chemicals industry participants. So that was clearly a factor that we looked at right out of the gate. It was a follow-on to the shale paper, and we really saw that as an influencing factor. And in fact, the data would indicate that the energy environment today, in terms of access to energy domestically, as well as the cost of transportation and higher oil prices, are a major factor. The competitive environment we have here in the U.S. is very unique and something that we haven't seen in quite some time because multiple factors are coming together at the same time. The need for capital for investment is going to be an influencing factor on the ability to locate or decide on a site selection for an investment. When we think about the availability of capital in the U.S. or globally, while there's certainly continuing constraints in terms of the availability of capital and tightening credit in the capital markets, I still believe the U.S. is the most robust capital market in the world. So while there's a tightening of credit on a global basis, relatively speaking, it's not a disadvantage for the U.S. It still probably bodes as an advantage for the U.S. We've seen for quite some time the U.S. dollar strengthening against the basket of global currencies, and that's created a more challenging environment in the U.S., particularly when it comes to GDP and exports. What we've seen more recently is a reversal of some of that trend in terms of the U.S. dollar. So the weakening U.S. dollar, particularly against the Chinese currency, would start to create an environment now where it's more conducive to exports, it's more affordable to manufacture in the U.S. The currency has been a major factor over the last decade in the affordability of U.S. manufacturing, particularly for export. It's more conducive now and more affordable to manufacture in the U.S. One of the things that continues to be a challenge for the U.S. in terms of competitive landscape is the regulatory and tax climate. The U.S., it's widely known the U.S. has one of the highest statutory tax rates in the world. So from a tax perspective, that is an additional cost. That is an area where we are not as competitive on a cost basis, and so that tends to be a negative factor in the competitive analysis. The regulatory environment as well, and it's not always just about regulation, but sometimes it's uncertainty with regulation. Investment requires some certainty. It requires the ability to look forward, understand what the return on the investment is or could be, and the ability to quantify that. So those two factors, I think regulatory and tax, are probably weighing against us in terms of the competitive landscape. In a manufacturing environment, the thing that we were interested in is how much of an impact does labor cost really have in that decision-making process? And it really depends. It depends on what the labor cost component is to the overall cost of manufacturing. So in some industries, take apparel for instance, where labor cost may be a significant influencing factor, a major cost component, that probably is going to lend itself to focusing more on labor costs. But if I think about primary metal production, the steel industry, heavy equipment manufacturing, labor is less of a factor, but the access to raw materials, the cost of transportation, the supply chain, lead times, those sorts of factors may weigh in more in the decision, and that tends to be where it's more conducive to manufacture here in the North American markets. America does have talent. At the end of the day, we still have one of the most skilled and highly educated workforces in the world. The talent gap exists from the shop floor all the way up through the professional jobs. Part of that is because there's a mismatch in the skill sets and the jobs that are available. But there's no doubt some of the most technical jobs that we have are actually manufacturing jobs. And we have an incredibly skilled workforce in the U.S. That's an attractive factor when you think about the ability to locate a manufacturing facility. The skilled workforce is a competitive advantage for the U.S. What we'll be watching as we go forward will be each of those individual factors and how they move or shift over time, along with tracking the individual stories, understanding where we start to see trends in terms of announced deals, announced investments, talking with our clients, executives, and understanding what's on the mind of the CEO and the board. We'll track that over time to understand if the trend continues and if it's bigger than just a cyclical recovery. I personally believe, just looking at these factors, that there's more to this, but it's going to be slow. The recovery itself has been slow. That's not surprising. Many of these investments are long-term investments. They require significant capital and a lot of time and planning, so it's not going to happen shortly. It's going to take several years to really look back and say, yes, we've really changed the landscape from a manufacturing perspective.